What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, I'm here to present to you an amazing opportunity on the SP 500. We've had a whole week of trading and trapping a lot of bears and bulls. So what I'm going to do here, guys, today is I'm really going to break down how we got here, what the expectations are moving forward, and how we can actually make some money on these plays. All right. So if you're ready, let's step into the war zone. So first and foremost, shout out to all the Trading Wars Army members in the building. Can I get a TW Army Spy VIP? Let me go ahead and retweet this right now. Let everybody know we are live. All right, so I just let everybody know that we are live and ready to go. Boom. What's going on? So I heard there's a snowstorm in New York today. What's going on? Shout out to Otis. Good to see you, my brother. Shout out to Rollbit. What's going on, brother? Good to see you. Harris, what's going on, brother? Good to see you. All right. So let's do this. So right now, guys, what we have on the daily chart for SPY is we have a Nirvana pattern. So the Nirvana pattern, guys, is one of my Trading Wars patterns. It's an inside and an outside bar. And it's when this little blue highlight comes down. And it's a very rare pattern because it involves a lot of traps and a lot of option decay. And as you can see, the last time we had a Nirvana was back on the 3rd of December, which we took long, and we had a beautiful, beautiful push up and made some good money. We had one more back in the 18th of November, which was still a great push up for the small risk that it involved. And then we have to go back all the way to the 8th of June in 2021 to see another one. So basically, guys, we have a very rare pattern here. And the positioning of where this pattern is, guys, is very important. And that's why this could be a once in a lifetime opportunity. Because if we just look back here, guys, you could see right around the 428 area here. This was a major bottoming for SPY in 2021. And this right here, guys, could be the biggest double bottom that we've seen ever. And we could just continue higher. Or this could be a real rug pull right here, because you have to imagine that how many trapped longs do we have in the building here? We have many, many, many dip buyers here. And if we start to turn the corner, guys, and break through these supports, I think we can really have a huge flip down. Okay. So let's talk about how we got here. Okay. And how we got here, I got to go to the Discord first and I can discuss with you guys. So here are my SPY swing trades for my members. So the last time we took a swing trade was here, where we hit targets. And let me talk to you about this because this is very important. Okay. So let me zoom in here so we can look at this together. And just remember this, guys. You see how we've been going sideways like this? This means that the option premium has been getting decayed. So for example, calls that were purchased back on the 25th of January, let's say with the 2-week expiry, are trading for 50% less right now than they were before. So what do you guys think? Do you guys think that's a good deal? Hit me with a 1 if you think that's a good deal. Boom. Shout out to Lizartsa. What's going on? Shout out to Wei. Good to see you, brother. What's going on? Shout out to JT. Good to see you. Nelson. What's going on? Appreciate you. So what do you guys think? Do you think this is gonna be a good deal for these options now? So remember, calls that we're trading here on the 25th of January, 2 weeks expiry, are now 50% less. So they are on sale because of all of this decay. All right. But let's talk about right now how we got here. Okay. Boom. Momin from Egypt. What's going on, brother? Olsis from California. What's going on? Good to see you. All right. So let's talk about how we got here first. So I want to just give you guys the picture. Okay. So the first short that we took here was back on the 30th of December. Let me just show you that here. Right here. So this was the short that we took in the swing trade room together. And this one was very important. And I'll tell you why. Let's go back to the weekly chart here. You see, we had this weekly outside bar. And I spoke about this on one of my swing streams, that this is a very, very powerful outside bar. And the reason is because we had new greedy buyers buying into all-time highs, and they got immediately shut down. And this is what it looks like, guys. So I'm really happy that I was able to share this pattern with you guys. And you can actually see that my call out here on Twitter was right here on the 7th of January when I mentioned that this outside bar was ready to break down below 466.08. All right. So we had a lot of trap bulls, and this is why we can have this rug pull, because it's just greed. Really, it's really just greed, and the greed eventually will burn, right? So that's how we got here with this massive drop. And then let's discuss what happened next. Well, what happened next here, we had an inside bar. So you know, a lot of people were tweeting and commenting like when this bar came in that, oh, the stock market is going back up to all-time highs, it's going to run, blah blah blah. But guys, if you're smart about this, if you look at the size of this bar, what's the size of this bar, guys? This bar is almost 5% large. Okay. So if this bar is 5% large, guys, the likeliness of us having another 5% move the next day are low. Instead, we have a higher probability of doing nothing. And that's what an inside bar does. It does nothing. It just trades within the range. And the purpose of that is to really trap new traders and to really screw them over and to really kill the option premiums and take advantage of people that are greedy. So get the pen and the pad out, guys. I want you to write that one down, because that's one of the biggest lessons I've learned in trading over the years, is that after a major move in the market, don't expect another move of equal size. Instead, expect a little bit of consolidation, a little bit of chop, and then we can look for the next move. Okay, so make sure you write that down. Don't be chasing when the premiums on the options are extremely high, because the whole philosophy that we do here at Trading Wars is always looking for a good deal. We want a good deal on the options. Okay, so hit me with a 1 if you guys understand that concept. Hit me with a 1 if you understood that one. So what happened here, guys? We had an inside bar, and this was the first trading opportunity that I played. All right. And I'm going to walk you through how I played that here. So if I take a Fibonacci and I stack it here. So what basically I was looking for here, guys, was we're going to break and hit this 272 and reverse. And a lot of people ask me like, why 272? Why 272? And the answer is, guys, it comes from me trading SPY every day and backtesting SPY every day and losing a lot of money over the years. Like, that's literally the simplest answer. Because every time I would backtest, every time I would journal, I'll be like, man, the thing's reverses at the 272. The thing reverses at the 272, until eventually I was smart enough to actually build a strategy around that, right? So we were lucky here with the swing trade. The first thing we did here, guys, is we took the run up to the 272, and then we took the reversal down from the 272. And I've already showed you guys all the live comments and all that, the call outs that I did on the Discord. I don't have time to go back and search that all up again, but I'm just going to show you here, guys, how this works. So boom. So there we go. So the first thing that we did here, guys, is we took this ride up to the 272. And then when we got there, guys, I had the long still, but I was break even on it. I scaled out and I took a hedge because I just knew if we look back at this chart, right? Yes, everybody wants to be bullish, but just look at this. Okay? Look at this drop. So you have to expect that there's also going to be some shorts that are trying again to short because they've already made a lot of money, right? Like we made a lot of money with this short up here. So we will keep shorting, right? We will, because the trend might be changing and you have to be one step ahead of the game. So that was the first interaction there, and that was good money. And what I would say, guys, is really right now, the market in the last week was a day trader's market. And you see, we made a lot of money day trading, but moving forward with this setup here, this could be a potential major pivot that could be for the rest of the year. Okay. So then after that, look what the market makers do again. And I just want you guys, like, the best thing that I want you guys to take away today is just look at these interactions and look how the market makers chop and kill the option premiums. I really want you guys to understand that, because when I go to the community, I always see FOMO, and some of the biggest channels are always pushing FOMO. Like, you have to get in now. Like, it's going to the moon. It's going. And I was there before and I lost $25,000. And there was nobody there to give me comfort when I lost $25,000. So I just want to educate you here. So watch what's going on here, guys. So the market makers, look, they run it up, they pull it back down, then they go sideways again. So now we've been killing option premiums for 1, 2, 3 days in a row. And after that big bullish bar, the premiums, like I give you an example, some of the calls were trading for $900 to $1,000 a pop. So meaning 3 or 4 times the intrinsic value, which is insane. And they just crushed those whole premiums. And then they did the even more craziest thing, which was on Friday right here when they did an outside bar. And the outside bar is devastating because it breaks the low. You see how it breaks the low? So people went short. Okay, we're breaking the low. We're breaking the low. I'm going to short. I'm going to short. I'm going to short. And then it broke the high. Oh, I'm going to go long. I'm going to go long. I'm going to go long. So we killed both sides. And now both sides are extremely nervous. But from my back testing and from my trading, the nirvana pattern is usually the conclusion of the pattern. Okay. We could very well keep going sideways, but at this point here, it's still a good opportunity because remember what I said, the calls and the puts are 50% less than what they were back on the 24th of January, relatively speaking, for the same option strikes, etc. Okay. So now there's a better deal. Understand? So that's what we're going to be looking for. Because sideways action kills premiums. So hit me with a 3 if you guys follow me there. And what I'm going to do is I'm just going to do a little sneak peek into tomorrow where I'm going to really be breaking down some of these quick in and out strategies where you can keep making that $150, that $300, like whatever, that little push for your 30% gains, lock in your money and disappear. I'm going to show you guys a little bit more about that tomorrow, but I'm going to go ahead and do a little bit of a sneak peek. Okay. So I'm going to go ahead here, guys, and I'm going to hit the replay and I'm going to walk you through something very, very importantly. And I'm going to go, don't worry, I'm going to go in more detail tomorrow because Sundays are where we usually go into a lot of detail and a lot of training. But today I'm just going to show you guys a few things. Okay. So the biggest advice that I can give you in this current market environment is to be nimble. Being nimble means you have to be able to day trade. You have to be able to swing trade. You have to be able to invest. You have to be able to do all 3 things because there's no easy route right now. There's no easy route. Swing trades have been getting destroyed because we've been going sideways, but there's still been opportunities to make money on the right names, but there's also very great opportunities intraday day trading. And let me walk you through that right now. So I'm going to just show you on Friday what we did. So Thursday was this range. So I'm going to just draw the high and the low because I always like to do that to give you guys a reference, right? So the first candle comes in like this, guys. Bam. Okay. So we have a huge big body bar, right? And I'm going to go ahead here and just walk you guys through the live commentary. So right here, guys, SPY live rich commentary. That's my commentary in the morning. Okay. So this was for Friday. So yesterday at 9:29. Good morning. I'll be taking the opening range breakout, the 3, the 5, 15-minute right away. So be ready. Short on trigger and orb. Great push here, guys. Let's cover some partial. So let me walk you through that. So that was at 9:34. So the first 3-minute bar comes in here. And for a day trader, always remember, you're looking to trap someone, right? So right here, guys, when we open so closely to the previous day's low, who is going to be trapped right here? Who do you guys think? Because we're opening so close to the previous day's low, who is going to be trapped? So guys, the inside and outside bars, I have a complete video on how to trade them. So just look that up on the channel so you can learn. The colors of the bars are irrelevant. Okay, you have to know the direction. So who do you think is trapped right here, guys? Well, look, check this out. Because we're opening so close to the low, anybody that bought calls right here, anybody that went long in this area is going to be in danger of getting stopped out immediately, right? So because of that, guys, we have that 3-minute inside bar, a 3-minute outside bar, sorry. And all we do right there is just take that opening range breakout. So if it breaks the low, I'm going to buy puts. If it breaks the high, I'm going to go for calls. It's a very simple strategy. Bam. Okay, so right there, guys, look at this. Right here, we broke the low. We broke this one here, which was the low on Thursday. And this right here, guys, is 30% return in 3 minutes. Okay, that's 30% in 3 minutes. Depending on your fill, guys, you could have got maybe 50%. I know some people got 50%. And that's it. Like, that's what you do to stay alive when the market is uncertain. You got to come in and hit it on the right time frames. Boom. What's going on, Peter? Let's welcome Peter to the Trading Wars Army. Welcome. Hit him with a Trading Wars Army Spy VIP. Welcome to the Army, brother. Appreciate you. So that's what I mean, guys. So that's what we were able to do that day and be done. So from a day trading perspective, you always want to play the morning, catch the best plays, and then move on. All right. And if you guys are up for it, I got one more to show you on AMD, or we can wait till tomorrow because I know it's Saturday and I don't want to keep you guys here forever. So hit me with a 4 if you're interested in looking at the one for AMD, or do you guys want to save that for tomorrow? And you'll see here, guys, like, I'm a very diligent trader. Once I have a winner, guys, and I understand that I'm green on the week, I will not give it back. So check this out. Big winner here, guys. I want to end my week in the green and not overtrade. I'll be switching my focus to the stock picks in the afternoon. We had an amazing week, and I want to thank each and every one for you being here. I appreciate you all so much. Get you on Monday. Do not overtrade. Start the weekend early. So you just need to understand, guys, when you're green, and this goes for people in my room too. When you're green, guys, you need to walk away at some point. You can't keep over trading. And the best thing that I like to tell traders, I know everybody wants to trade a lot, right? But if you start off the day and you make some good money, or even if you lose, cut your size in half. Cut it down. So if you want to trade for the rest of the day, you can make mistakes and you can you can still survive, because let's say you're risking $1,000 a trade, then risk $500 a trade going on, or if you're risking 300, then risk 150. Cut your size down to protect you. And the other thing that you can do here, guys, is you can implement the 3 strikes and you're out type of approach. So the 3 strikes and you're out approach that I like doing is just have 3 trades a day. That's it. So a combination of what my methods are: opening range breakout, Fibonacci, and inside outside fractal bars. Just take 3 of those and then wrap it up. Okay. So this is for everyone anyone that day trades and struggles with over trading. You could be in my room. You could be trading on your own. Please take my advice, because this is what I've learned over the years. Generally, nothing good comes from over trading, period. Okay. So now let's go to AMD and I'll walk you guys through that one. So that was a lotto play, and I'm going to talk to you guys about exactly what I saw and how we traded it. Okay. So this goes back to the $150 challenge. This goes back to the $150 challenge. And what I'm going to do here, let's pull up the Twitter so I can show you guys the evidence and, stop the hindsight trading trend, because the hindsight trading trend is too much. It's too prevalent, and it's not good for the community. So I'm going to show you here. This was my gains on AMD. Okay. So AMD, January 28, 22nd, 104 put. So you could see here, I got in at $1.35. So this goes back again, guys, to the $150 challenge. Okay. So I put up I put up $135 for one contract. I bought 2. So you can see I bought 2 here. So the total investment here, guys, was $269. So that's not that's not that much amount of money. Like, I'm sure for the small account people, like, this is something you can manage, right? Hit me with a 3 for the small account challengers and the small account individuals. Hit me with the 3 if this is something like a size that you would be okay taking. So $269, okay, $1.35. And so when I sold it right around here, guys, it was going for $265. The high was $2.80. So obviously you're never gonna always catch the high. Don't let that be something to discourage you about. That's just the way trading is. So right there, guys. So $300.01 was the P&L. Okay, I was able to get out there. All right. And if you did one contract, you would have been able to hit that $150 challenge that you want. Okay. But remember, this is Lotto Friday, so there's always a major risk of this premium going to zero. And let me just walk you guys through the whole day. So for this, I have to go to the midday option scan so I can walk you guys through the thought process. So the first thing, guys, is we have this big bar. This is the 930 bar on Friday. And this bar is a great bar right off the bat because you could already see that there's a lot of indecision. We have a long wick on the bottom and a long wick on the top. We're going sideways. So this is great because you already know the option premiums are going to start to get hit. Now we wait patiently. So we have a big bullish bar. And then this beautiful bar comes in here, guys. So this inside bar, very, very tight. And then you'll see here in my room. So this is at 12 o'clock. So right here, we started off with a big list, but none of these lists actually closed with an inside bar. So their premium were too expensive. So I said, all inside bars have broken out already and the premiums are way too high right now. I'll rerun the scan in the afternoon to see for any setups, but won't force anything unless we get a good deal. Because I'm really trying to cater this to people that don't have a lot of money to just like buy Tesla puts or calls. You know what I mean? And because that's what the community wants, and I'm gonna do what they want. And also my brother right here, Derry, he's also doing a small account challenge, so it's perfect timing. Okay, so then we were looking at Macy's and Procter's and Gamble, but they also didn't close. And then we came down to our two picks right here, Baba and AMD. So AMD, guys, was the one we ended up going with because the premiums were crushed, right? And you could see here, we said AMD filled short. This was at 1232. And then we got the 104, 0 days to expiry. So obviously it's a high risk trade. And then we were able to catch that big winner there, boom, on AMD. And let me just walk you guys through it. So the whole concept of this is this tight inside bar. So remember now, at 10:30, we had a big push. That big push, right, is going to increase the price of the calls. But what do you think is going to happen from 11:30 to 12:30 when we just go very, very tight and we go sideways? See, what do you think happens here? Check this out. So the range is, let me ask you guys a question here, guys. Is the video quality blurry, or is that just some people's settings are not right? Because I'm pretty sure I'm streaming on high definition. So let me just ask you guys, hit me with a 1 if you can see everything properly. Hit me with a 2 if you can't and there's something wrong on my end. Because I'm pretty sure I'm streaming at HD right now. Let me just check. Yeah, I'm at full high definition. So if you're having problems, guys, with your side of it, just please change your settings, all right? It's definitely not me. All right, so we're zooming in here, guys. We're going sideways now from 11:30 to 12:30, and that's when it shows up on my radar. That's when I get excited, right? I get excited now because I was like, look, the bulls stepped in here. They pushed it up. The calls are very expensive. We're coming in here now, and premiums are getting decayed. So now, guys, if I take this play right here, so this one right here that I took, the 104 puts, what do you think about those 104 puts? Do you think they're going to be trading at a discount after all this big push up and then this sideways consolidation? What do you guys think? So if we have a big push up for the bulls, then we go sideways. What do you think is going to happen to the puts? You think they're going to be decaying or increasing, right? What do you think? So what we got here, guys, the 104 puts, these were in the money because we went in the money because the spread was good. So when you always have to look at the spread as well. You don't want to get something with a large bid and ask spread, right? So look, exactly. So the puts got hit. They were trading at $1.35, and that's the 104, and they're in the money. Now check this out, guys. So all we did here, when this closed, I took this. Once it broke down this low, I went short. Now check this out. Okay. So at first, guys, we didn't do much. We were basically break even for that next hour, and then we got the follow through right there. Beautiful. So there is the follow through, guys. And then after that, we got a reversal. And that's why I was mentioning that when you do the options, right? I always say scale out above 25%. This is exactly why, especially when you're trading Lotto Friday, right? So there we go, guys. So that's how you do it. So this move right here was about 100%. So what I do is I scale out in increments. So for example, anytime I'm above 50%, that is my time for me to at least move the trailing stop loss to 50%. But what I like to do instead, guys, is actually I like to take this fib. So this is the fib. I take it from the low to the high, okay? And you could see we reverse right on the 786, right? And that is why I love the fibs, because they give you, even if you're not the one taking the long, if you're on the way down, you use these as targets. And a lot of my traders use them as targets. But what I like doing generally is I just like selling these for anything above 50%. If I get a little bit greedy, I just go for 100%. And that's what I did with AMD. I just did 100%. And the reason why, guys, I was a little bit greedy with it is because I already made money on SPY. So the worst case scenario is I go break even. Okay. So that's the way that I do it. 100% is anything above 100%, guys, starts to get really greedy. So you really want that 100% is that turning point. It's that turning point for you and your account. But if you're a really small account and you just want to scalp these plays, you could definitely take it all off at 25 to 50% and have a stop loss that's tight. So you're risking 25%. You know, a lot of people, guys, that I've watched over the years, and I don't know if you have the same experience, but this is the common thing that I've heard a lot of times. And I want to ask you guys, before we end the stream here, let me ask you guys. I watch some of these big streamers, some of these big traders, and they always say the same thing. Like, okay, I took the options, like I took puts or I took calls or whatever, right? But if it turned on me, I would have gotten out right away. Have you guys heard that before? Like, okay, you know, if it doesn't work, you just kill it right away. Have you guys heard about that before? So for example, like someone will be like, okay, you know, I took you know, Amazon something calls, made 500K, and I went in with 100. I went in with 100K on calls, and if it didn't work, I would have killed it quickly. Have you heard that before? Hit me with the one. Let me show you guys some. Let me show you a bunch of different strategies. Okay, let me show you a bunch of different strategies, how to actually do it the right way, so that we don't have to have that subjectivity. Because I do watch other people in the community, and that's the one thing that I never understood, because it just doesn't seem right. So I'll show you guys what I'm talking about here. All right. So what you want to do is, if you're doing 0 days to expiry, what you want to do is this. You can trail the high of each bar on the hourly chart. That is probably the most lenient way, but you could also give back a lot. Very simply. So for example, we take the puts here, you trail this high, then you trail this high, then you trail this high, and then eventually get stopped out. Alternatively, you can go down to a lower time frame, like a 15-minute chart, and do the same thing. So as an example here, we're coming down here, guys. So one of the trailing stop loss methods that I taught you guys was trailing with the big bars, right? So if, for example, so your short is up here somewhere, you get a big bar like this, you put your trailing stop loss there. But I think that works a lot better when you're trading something that doesn't have time value associated with it. So when you're trading options, the best way is either an all or nothing approach. I'm going to risk, especially on Lotto Friday, I'm going to risk all the premium to make 100%, or scale out at different targets. And the targets, guys, are always going to be a Fibonacci, always. And because, you know, if you follow my work for long enough, you know the Fibonacci, Like, you have to understand on the way down here, where are the bulls going to step in, right? That's the way to do it. You know, at the end of the day, guys, it's up to you. Depends on your account. If you have a very small account and you want to be in and out aggressively for 25 to 50% returns, then that's totally fine. But you also have to make sure you cut your losses quickly too. If you're a home run trader, and a home run trader, as an example, would be going for big moves like what I did on Nvidia the other day from 5 to 25, that it depends on what's in the rest of your account. So for example, if I take a major hedge, puts, if I take puts on the lottos, right, on a Friday, but the rest of my account is bullish, then it makes sense for me. So you really need to analyze, where are you? Do you have long-term holdings? Like, let's say you have long-term shares in SPY or something, or let's just say AMD. Let's say you have long-term shares in AMD. If you take the puts and you go full risk, you're basically just buying insurance on your long. So there's many ways to break it down. The fact of the matter is, guys, you got to find a way that works for you and your account size. Your account size determines how you can trade. The larger account you have, the more lenient you can be with home runs. The smaller, the more diligent you need to be and precise. All right. So there it is, guys. I think a lot of people have dropped off, like I suspected. On a Saturday, you guys want to be in the club sipping on Hennessy, and there's nothing wrong with that for sure. But I'll be back tomorrow, and we'll have a great Sunday stock talk. And tomorrow, let's really just focus on the strategies step by step, and just focus on the opportunity step by step. Okay, let's do that tomorrow, and let's go ahead and just focus on all that. So make sure you tune in tomorrow, Sunday stock talk, 8 p.m. It's going to be a wonderful stream. I want to thank each and every one of you for being here today. I appreciate your time on a Saturday, and you guys are awesome. Thank you so much. So this, oh yes, let's do the giveaway right now before I forget. Thank you for reminding me, Adriana. Where is this? Okay. So how to make $150 a day trading options, small accounts. So we have 74 comments here. So I'm going to do a random number generator right now. And then we're going to go from there. Random number generator. Okay, number 11 is the winner. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay. So Derek C. Another exceptional education you put out, Rich. Thank you. Your method has helped me to cut out many noise during trading. Just amazing. Thank you, brother. Derek C0107, my brother. Thank you very much. You want a copy of my book, SP 500 Mastery, and 1 month free in the room with the crew. So please DM me on Twitter, and then I'll verify you, make sure it's you, and we'll get you all set up, guys. And guys, on the way out here, I'm about to just post the swing trades for next week. I don't have too many because I'm just focusing on the higher quality setups going into next week. But definitely, guys, check me out at tradingwars.com. If you get any one of my books, you get 1 month for free in my stock room or my SPY room. And if not, guys, you can just sign up for the rooms directly here. Here's the SPY room, and here's the stock room. The button is down there. All right. Thank you very much for your time, guys. You guys are the best, and I will see you again. If you want an opportunity to win a giveaway, please leave me a comment right now. Okay. So I'm going to end the broadcast, leave a comment, and just tell me, let's just brainstorm together. What is your preferred way of scaling out options? Or just like, what do you do? Do you have a stop loss? Do you not have a stop loss? Do you go for 100%? Do you go for 50%? Like, what have you found that worked for you? And then maybe we can share it with the community. So go ahead and comment, and you also have a chance to win a giveaway. Okay. So comment right after broadcast. I'm going to end it now. What's your way of trading options? What's your trade management? That's what I want to focus on. How do you manage your trade? I don't care about the setup, but how do you manage the trade once you're in it? Thank you very much, guys. See you tomorrow.